webinar. Nice to
Hello.
have you here.
Hello.
Exactly. I'm not alone, so hello to Kevin and Patrick. Nice to have you with me.
Thanks. Great to be here.
Hello, great to be here as well.
Perfect. I'm sure you're all sweating as well as we do, but we will wait another 1 to 2 minutes so everyone can join. Yeah, we have like full house today, so let's see how many people will show up. But I see people are coming in, so that's perfect. Not everyone swimming in the lake or in the body, so that's nice. Perfect. So I then say, let's start. First part is anyways just technical setup and the first few words. So once again, welcome to our webinar on AI market insights and Selma's investment strategy. Kevin and Patrick, it's great to have you here by my side. So we're ready to start the webinar. A few words about the technical setup. So this webinar will take around 45 minutes. And regarding questions, you can ask them anytime in the chat. The chat is in private mode. That means only like the Selma team can see your questions, not everyone in the webinar. And Niklas from the Selma team will be answering them. So also hello to Nick. And in case we can't answer all the questions during the webinar, we will follow up by email afterwards. So let's introduce ourselves briefly. I will start. So I'm Michelle. When I'm not hosting a webinar with two finance experts, then I work as a social media and event manager at Selma. Kevin, do you have a few words to introduce you?
Yes, sure. Hello, I'm Kevin. I'm one of the founders of Selma and our COO. I have been dealing particularly with Selma AI and in the last month, so I'm happy to join from that part today.
Perfect. And then we also have Patrick. So a few words from you, Patrick.
Yes, sure. I'm Patrick. I'm also founder of Selma and our CEO. Additionally to being a CEO of the company, my career since now, almost 20 years is in investment management. And I'm also co-responsible for our investment strategy, our algorithms, and that will be my part also tonight to shed a bit of light at the markets and the development of the markets and what we expect in the future.
Perfect. So nice to have you both here as founders next to me. That's super cool. And now we're going to the agenda. So the agenda has 5 parts. As you can see, we will start with the investment strategy. Then we go over to Selma AI. We do the market update. Then a few words about like takeaways, something you can take with you. And then in the end, the Q&A. For the Q&A, it's important. So many of you already shared some questions with us. So we will also answer them during the presentation. But of course, we can't answer all of them, but we try our best. And just keep sending questions in the chat and we will follow up with all the questions who are not answered after this webinar. Perfect. So let's directly start with part 1. So we will do a little warm up for everyone. We will do in the chat section. Next to it is the poll section. And there we will add a question. And the question is, who is already a Selma customer? So you can now vote if you're already a customer or not. And I see answers are coming in. Okay, so at the moment, it looks like we have more Selma customers than not yet Selma customers. And so I think interesting mix still. We also have some who don't know Selma or who are at least not customers. And I would say let's directly dive into the investment topic with you, Patrick.
Yes, absolutely. For our customers, I see here 75% of people here are already Selma customers. So this might be a little bit repetitive, but I think it's still good to briefly look at the basics before we then go into the specific market developments later on. So I'd like to recap first on Selma's investment philosophy. That's how we see investments in general. Selma is a provider for long-term investment. What does long-term investment means in the financial markets? It's a pretty long period. It's 10 plus years, and that's usually also the time frame where the chances to gain money over that time become really high. So Selma is not a tool to get rich quickly. You can find a lot of those tools somewhere in the internet if you Google for it. But being rich quickly also very often means being poor very quickly, because there is a lot of risks involved. Then we are diversifying globally. What does that mean? We spread investments over the entire world and over the entire globe into different assets, in investment opportunities, which are stocks, bonds, precious metals, private equity, and so on. So the risk is very well spread. This is always aligned with your personal financial situation. As we know, as we get older, and also our financial lives change over time. So it might not be the same right after going out of university or starting your first job, building a house, maybe having a family, then later on going into pension, needing to withdraw money from your wealth. All of that changes your financial situation, and Selma actually adapts to that over time. It's also tailored to your risk ability and risk willingness. What does that mean? It's basically the ability how well you sleep when the market gets a little bit more shaky, as it as an example does today. So if markets drop and something happens and things get more shaky, how well can you also for a certain time tolerate losses with your investments, or tolerate performance that is maybe not so good for a while when markets are not doing so positively. In a summary, yeah, it's not a tool to get rich quick, or a service to get rich quick, but to consistently get rich over time. And we do not invest in certain specific companies, markets, and industry. Don't make us dependent on them, and spread the risk well throughout the markets. The basis for that is a so-called global market portfolio. The global market portfolio is a representation about how the average investor, or all the investors in the entire world, invest, and how basically if you take all the money that is invested and look at how it is invested, that is the global market portfolio. And it is per definition the most efficient portfolio available because money flows wherever it can generate the largest return. That's not an invention that I came up with. So there are Nobel Prizes being won for this. The basis for this is a name you might have heard. It's Harry Markowitz. He has invented the modern portfolio theory, which is basically explaining the power of diversification, that you can achieve the same return with less risk by spreading your risk over different assets and different investments. And then on top of that, a guy called James Tobin, he has developed a model called the capital asset pricing model that actually explains that the most efficient portfolio that we see here is the sum of the global investor, as money goes where it can be used most efficiently.
Perfect. Maybe just before you go to the next slide,
Yes.
I found like one question that was asked, and I think that would maybe suit here, like for the global market portfolio.
Yeah.
So one person asked via email, why shouldn't I just invest in an MICI world? This is also a global portfolio. Do you have an answer for this?
It's a very fair question, and I think thinking about investing in an MSCI World in such a product that you might find is also a very good start, because it actually shows that you're investing. I think the name first of MSCI World is a bit misleading, but because you need to know MSCI World contains more than 70%, I think 72% in one country, the United States of America. So it's actually, if you don't think the US is the world, it's not really an MSCI World, but it's an MSCI US. Plus, it also makes you very dependent, obviously, of the economy in the US and of the development of the US dollar. It's been going very well with the MSCI World in the recent years, but there are also risks included, obviously, to bet a lot on a single country, if it is just Switzerland or just the US or whatever. On top of that, the MSCI World is a pure equity, so-called equity index. That means it just contains stocks. It doesn't have other asset classes, as you might know, at least like I think 76% of our customers, as you know, in your portfolio, dependent on your situation and the market situation, might also have other things than stocks. It might have bonds in there, it might have precious metals in there, it might have real estate in there, it might have private equity in there. And this is all not included in the MSCI World.
Okay, perfect. So I hope this answered the questions. Thank you, Patrick. Now again, your turn.
Yes, sure. So when we have the second step, basically after having this global market portfolio, is that we do adjustments based on the financial markets. So, and that's the third Nobel Prize. It's also not my invention. Came up, was developed by somebody called Robert Shiller, that developed a model that is called Shiller Capes. And what it looks at is if the markets are currently expensive or cheap when you compare them with themselves. So it looks, if you're currently investing, as an example, in the US market, is that currently expensive or is it cheap? As you know, investors are emotional, or humans are emotional, which also makes investors emotional, and there might be under and overvaluations in certain markets because people get too excited or maybe less excited about something. And what we're doing there is that we make small adjustments based on that. What we also do if we see that all markets are very much overheated, was as an example the case just before the pandemic started, that we then put more money into precious metals, as the history has shown they're usually more stable when things start to shift and become really uncertain. They become a store of value. So also when everything is very much overheated, we take the risk a little bit down of the portfolio. That's the second thing. All of this is a combination of humans and machine. So that means first the humans that have developed all this financial economy about those algorithms, we that have developed then our algorithms on top of that, but then also humans that look out for the best investment products and how they fit into your specific portfolio. When it comes to your specific portfolio, I think that's very important. I touched upon that briefly before. We also adjust to your personal situation. That happens automatically. So if you win the lottery, maybe you do, maybe you don't, but you might have other things that happen to you. You might buy a house, you might earn more. Hopefully, you might also earn less over time. You might be in an age where you start withdrawing money from your pension and so on. And all of this is adjusted automatically in the background. So your investment strategy is actually something that develops and lives with you over time. Usually, not every small adjustment needs a change. That's what often the financial industry wants you to believe, that everything that happens on the market and every adjustment needs a change, because they like a lot of activity, like they like people trading because they earn based on that. So usually it needs quite some changes in your financial situation over time, that also your strategy needs to be adjusted. Yes, that was a small recap to, as you said before, to warm up
Perfect. I feel really warmed up, so that's perfect. Thank you, Patrick. In case you are not yet warmed up, I have another poll for you. And before we go to the Selma AI part, and that's the question, and it's again in the poll section next to the chat. And the question is, have you already tested Selma AI? And you can again vote on that. And it's always interesting to see how many people are already using Selma AI or at least had one chat with Selma AI. And I think at the moment it looks like not that many of you have it tested. Also interesting to see.
Balancing a bit out.
Yes, yes. So, Kevin, I mean, that's your part. So I will let you take it over and also take the poll results with you.
Perfect. Thank you. Yes, so now about cool to see that 40% of people have already tried out Selma AI. So happy to shed a bit more light on Selma AI, why we have developed it as well, and what a bit of are the plans. We launched Selma AI as a beta in March, and since then, even though today only 42% tried it out, since then more than 15,000 conversations were held with Selma AI. So we were super excited how many people have been using it already. And we also get quite many questions over the time. How does Selma AI work? What are our future plans to develop it further? And that's why we thought it's a good time to include it in today's webinar. But maybe before we jump to that, maybe go back to why when we started Selma, our vision was always to, on the one hand, make investing very easy and accessible to like everyone. And on the other hand, to help people with their unique financial situation, to figure out and help them with their financial decisions, to figure out what is the best way to reach their own goals. And here, Selma AI and being the first AI-powered financial advisor is kind of for us the natural step to build towards this vision. But in order to understand what Selma AI can do, let's look at what's the role of a good financial advisor is in general. So there are thousands of these financial advisors in Switzerland, particularly, and usually it all starts by getting a really good understanding about your overall financial situation, to understand what's the structure of your wealth, how much cash you have, if you have other investments, if you have real estate you own or a mortgage on that. So to understand what kind of risks you're already taking. Next to the financial situation, it's important the life situation. Here, Patrick already said there is a big impact if you are still at the beginning of your earnings years, right, entering your professional life. If you have already family that depend on you, mortgage to pay, or if you are closer to retirement. All these factors have a big impact in how you should deal with your finances, but then also what kind of goals and how to reach them. And so the next step is, after understanding this situation, is kind of to building this plan together to achieve these goals, and only then to define what is your investment strategy and how to best or tailor the investment strategy based on that. Managing the investments then comes in a later step. And as Patrick also said, a lot of things are changing in people's lives. So one of the big roles is here to help with all kinds of financial decisions throughout your life is changing. All this kind of type of financial advisory usually comes with a lot of effort, a lot of costs as well. This is why this type of financial advice is usually offered only to a small group of people that invest large sums. And we talk about hundreds of thousands, millions of Swiss francs usually. Or the alternative is to pay for these services extra. And here we see that this is also not super accessible when hourly costs are on average 150 Swiss francs. This kind of motivated us also to kind of figure out how can we use technology in order to democratize this form of advisory, help, assistance with all kinds of questions regardless your financial situation. And that's why this also fits perfectly in building towards our vision. And that's why we launched now in March the first version of Selma AI. We see Selma here as your assistant that can help you with all kinds of your financial questions that bring you additional insights that you can make your best decisions then on. So what can Selma AI do today? As mentioned, it's yet a beta model, so we have limited the topics that you can interact with Selma at the moment. By the way, for all those that haven't tried it out yet, you can simply download our mobile app. There you can discover then all of these topics and directly jump into the chats with Selma. So for everyone that hasn't yet tried it out. What are the topics that we currently cover is particularly things to provide you more insight in your holistic financial situation, to understand and get a sense of what can, for example, be improved, but then also to get first help with planning. So example, to understand your cash situation better, how much cash buffer should you have, how much can you invest at max, and if you have more cash, for example, that you hold, how should you ideally build this up with investments over time, so you get this form of an assistance. But on the other hand, it also gives you more insight into your investment strategy, how it's built towards your with your investment profile, and then general other helpful tips and tricks around financial topics, but always very tailored to your unique financial situation. How does Selma AI work? As Patrick mentioned, the investor profile is very core, and this is also what a human advisor would do in that sense. So it's all about this 360-degree understanding about your financial situation. And this has formed since the beginning at Selma already the basis when we build investment strategies. Our own algorithms found then on this investor profile, and we calculate how much risk you can take, how that portfolio should be structured, and all different insights about your financial situation. What we lacked in the past, though, was a simple and easy way to translate these findings then into human, understandable, easy, digestible advice and insights. And here now, new technology with AI and large language models comes into play. And this provides now, when combining these with our algorithms, this provides now a unique way of experiencing this kind of insights. And that's why we create this unique advisory experience.
Perfect. Kevin, before you go to the next slide, I also have a question for you. That suits this slide, I guess. The how Selma AI works part. Is Selma AI also like managing the portfolio, was the question here.
That's a very good question. So as well as in the past, our own algorithms take over the way how investments and portfolios are constructed and built, and also how the investments are managed. The AI and language models rather turn over the responsibility for financial planning, providing more insight. So it rather stays on that side.
Okay, perfect. Thank you for clarifying.
Perfect. Then we can jump to the next slide in that sense. So a bit of an outlook, what's coming next. As said, we have been launching Selma AI in March and gathering lots of feedback from our clients as well. So we see that there is quite a lot of engagement happening. People are discovering these topics and are asking for more. So now we are gradually expanding our Selma AI into new areas and new topics to help you with all kinds of insights around financial topics. One of them first already more comprehensive analytics about your overall wealth, more guidance and with financial planning. So for example, to identify how big of a pension gap you might have, what would need to do to close that pension gap. But then also more learning insights about general what is beneficial to improve your finances. And ultimately also insights, for example, about current market conditions, topics that we cover in webinars like this, that Selma AI can give you more up-to-date information, regardless not only once a month, but whenever you need it instantly. Perfect. That's I think the perfect topic now to hand over to Patrick when it's then about before AI is taking over the market update. So now Patrick can still give some further insights.
Perfect. Before Patrick can take the word, I take it first, because we also have a third and last question for you. So first, thanks Kevin for this Selma AI update. It was really interesting, and I hope everyone who has not tested yet Selma AI will do this after the webinar. And again, in the pulse section, and we have one last question for you before we come to the market update. I will share it. So the question is, what do you think, how will the financial market develop this year? And you have 3 possible answers. One is rises, one is falls, and one is stays the same. And yeah, we're curious to see how you think the markets will develop. I think it's a bit mixed. It's everyone is, some are mostly rises, but still mixed. So with mixed feelings, Patrick, I hand over to, or the mixed feelings, I hand over to you, and you can tell us if you agree or what is your perception on this?
Yes, thank you very much. I really gonna enjoy this session now before AI is gonna take over the market update. So before we look into the future, I would start with looking a little bit back and see what the markets have done in the past and how they have developed so far. Let's first look at the financial market in 2024. So this year, we can say that so far, even with now today and yesterday, which were days where we saw more movement and where we also saw some worries about some of the big tech companies maybe being a bit too expensive, we can still say that the market so far was a very positive one in 2024, especially also for an international portfolio like the one we have at Selma. We have here, you can see the chart here. I've compared a global market portfolio with the Swiss market. You can also see that the global market portfolio has been stronger as investing only in Switzerland. For the Swiss investor, usually it's common that you invest quite a bit in Switzerland, and not only now with a provider, but you also need to be aware that your second pillar, your AHV and so on, they're very heavily invested in Switzerland, and that's also an additional reason why we think it's good to also have a international portfolio that balances out that risk. Why has an international portfolio been stronger? First, the international markets have been doing well, but then also on the exchange rate side, we have seen that the Swiss franc has been weakening a little bit, and both of that has pushed the performance of international investments. When we now look a little bit further back, basically to beginning of 2022. You might know 2022 has been a bad investment year, one of the worst that we have seen in the recent years. And then 2023 has been mixed, very mixed year. You can see here a lot of movements in between. You can also see that now basically with a global portfolio, you're barely break even. So you have a few points that you are above the initial 10,000 Swiss francs that you would have invested, or today it might even be very much break even when we look at the last 1-2 days. And you can see that with a Swiss portfolio, you would not even have your money back yet. That also tells us in the markets sometimes here that has maybe not be a very pleasurable experience if you have started to invest beginning of 2022 or late 2021. There wasn't really much where you could make a lot of money here, right? And you've been in a situation where you've started and you've lost and you've been minus the entire time. And now finally you've seen that there might be the first profits that you have seen. We can also say that this period was positive for dollar cost averaging. What does that mean? It's positive for the investors that kept investing regularly as they were buying at different prices, and so have been smoothing their purchase price. For that, I've also brought a little example here with two investors, a one-time investor and a monthly investor. Let's assume they have both started right before markets went down, so on the 1st of January 2022. The one-time investor has started with 10,000 Swiss francs. Then the reaction was, okay, the markets went down, I'm not going to put further money into this because that is it's developing negatively. And what's happened, we've seen that on the chart before. They've just turned break even now. They have earned around 300 Swiss francs on that and would now have a gain of roughly 3.11%. Then on the other hand, there is an example of a monthly investor that has also started on the 1st of January 2022. They've started with the smaller initial investments. They started with 2,000, but they have invested 500 Swiss francs monthly every month. So you can see when we go back to this chart, you can imagine that they have been buying at many different points in time, one time up, one time down, and they have kept investing the 500 Swiss francs. In total, they have now invested 17,000. That's the 2,000 initial and the 500 monthly, and they would have a wealth now of 19,615. Based on the investment of 17,000, that's a gain of 15.4%. So you can see that in this period where markets are very shaky and they don't move just straight up, but they go up and down, that this cost dollar averaging has been very positive. With here a gain of 2,615. What's important, both of them have been investing in exactly the same curve here. They've both been investing in this blue curve. So the market for them has been exactly the same. Also in your Selma portfolio, that's probably something that we can dig in another time. We would also show the same performance for them in percent. So we would show the 3.11% of gain as a percentage because that's what the market has done in this period. However, as also said before, the Swiss franc gain here for those two investors would look very different. For one, it would be 300. For the other one, it would be 2,600, which is a quite significant difference in terms of their investment.
Perfect. So
Yes.
I just have another question. I think maybe this suits here. So we now see like the one-time investor and the monthly investor and the differences between both of them. But I think we also, or not, I think I know that we have like two different strategies at Selma. So we also have like the sustainable and the not sustainable one. And so one question was asked if there are differences too. And I think also like one person asked this in the chat during the webinar. So can you answer this maybe as well?
Yes, of course. Actually, I have a slide here for that.
Oh.
So what we can, mysteriously, I have a slide here for that. So what we can say at the markets, and that's not something we just see at Selma, but it's a market view, is that in the last 1.5 years, especially now in 2024, that sustainable products have been underperforming the market. Why is that? Sustainability acts like a filter. So what's happening, you're taking certain industries out, you're taking weapons out, and then you filter the companies based on how they do in regard to sustainability and to ESG criteria. When you're now in a situation that the companies that you filter out and the areas and the industries that you filter out are doing better than the others, then you can see that there is a gap widening here. And we saw that especially now in 2024, that there was quite a significance when it comes to the comparison of a standard strategy and a sustainable strategy throughout the market. I think so that though that this is also in a certain sense a personal decision, right? So if you, as an example, don't wanna invest in weapons and you don't want to invest in certain industries, then obviously if those do well, you profit less, but you have still made a choice for investing sustainably. And it's also not necessarily the case that this will continue like this, right? That the performance now in the standard strategy is also quite often from a few companies, right? Big tech companies and so on that might not meet all the sustainability criteria. And it can also be that this gap might close again in the future. Also, what we need to look at, we talked before about long-term investing, and there I said that's 10 years. So when you talk about financial markets here, if you look at 1.5 years, it's a really short period to say, okay, if is there a systemic change, is sustainability gonna underperform over a long time? It's basically not something that you can say on such a short period, but it's something that we need to acknowledge that in this market environment where also sustainability is maybe a little bit less seen also everywhere than it was 2 years ago, and it's less of a trend currently, that those strategies did less well than the standard strategies that we have. Then maybe let's go into another topic and move a little bit away from the equity markets and go into the bond markets. The bonds, they have in 2022, 2023, when we saw the interest rates going up so massively and so sharply, they were not doing well based on that. So they made losses because the interest rates went up so sharply. And what we see on the area of bonds is that those losses are not fully recovered yet. So what I've shown here is a global market portfolio that also has 30% bonds. When you remember before, a market portfolio that is equity only would be in plus now. One that also contains bonds is still below the purchase price. What we can also say though is that the market have changed. So bonds have become now an asset class where you can earn interest income again. So you basically, they came from an interest rate where you could basically earn nothing on them to an interest rate where you consistently now also over time earn income on them again. And we are now in a very different situation where we expect interest rates to go down rather than up. And that means the mechanism would work also in the other direction. If interest rates go down, that bonds would profit from that and then have gains instead of losses on their value. So there is often on the market also certain terms that you hear that define the markets, and that's also connected to what I just said about bonds and interest rates. And there are two female names here, Tina and Barbara. The time we've seen before 2022, 2023, those sharp interest rate hikes was called Tina. Tina stands for there is no alternative. You can see interest rates have been 0, 0, 0, 0, 0, 0, 0 for years and years and years. And that means you simply had no choice for getting a return to push money into the markets. Even though they were moving, you needed to take risk in order to generate a return because there was no really good low risk alternative. In Switzerland, the interest rates have even been negative. Those are the euro interest rates here that we're displaying. So there was really no alternative. And this has now changed to a new term, and the new term is called Barbara, or Barbara in English. And that means bonds are really back and really attractive again. So what I said before, we are now in an environment where bonds really earn income again, and where you earn interest on them over time, and where we're on an interest rate level when interest rates go down, that they would also profit in their value. So if you in your portfolio see bonds that might still be underwater or have not performed so well, the outlook for them is now much better than it was in 2019 or 2020, because we simply moved from Tina to Barbara. Then, as a last point, let's maybe also look a little bit forward. What is defining the markets? What are the big topics that we have here? Inflation and interest rates will be a really important topic. So when will interest rates go down? How fast will those cuts be? And that will be defined by the inflation, how high that is. As lower inflation gets, as faster interest rates will be cut. As I already said, we'd expect that bonds should recover the losses they made over time by two factors. Number one, accumulation of interest income over time, interest income that you now get again as TINA is over. And on the other hand, also then profiting from interest rate cuts. We think that there are a lot of uncertainties around the world. The political situation is still very unstable. There are also things like the US elections that are uncertain, and so on. So we do expect that there is still a lot of movements in the markets, that we will not see a very straight line. And that would again also speak for a strategy with dollar cost averaging. So not putting all the money you have on your savings account in the markets at once, but basically trying to average your purchase price over time, and work with a very strategic strategy over time, and basically profit from those movements by buying at different times. Let's also, as a last point, I see we're progressing on time, but let's still talk about it because it's everywhere in the news. US elections, short term, usually elections are positive for the markets because the current incumbents, that changed now, though. The incumbent is not going to run again, but the current government is usually pushing a lot of money into the market, as the level of the markets is defining votes. So the Americans, they look at the S&P 500 and their leading indices to basically define how well the economy has done. And the economy is a deciding factor for votes. So usually there is a lot of money flowing there, and then it depends a little bit on who is gonna win. We see on both sides, we would expect that the government spending remain rather high, with Donald Trump spending probably more than the Democrats would. Trump is also somebody that would rather relax the taxes, which is good for the economy. So lower taxes, more investments, that would be positive for the markets. On the other hand, what we would see with Donald Trump is that he's more restrictive on trade. So what we've seen in his last term is that there were all the tariffs against China, America first, and that's negative in a market in a sense that this boosts inflation. So if there is no free trade, things are getting more expensive. Things that are produced in the US are more expensive. So that would boost the inflation, and that would mean the interest rates could not go down as fast as they would be expected. Also really interesting, in the next election term, there is going to be a new head of the Fed, the US Central Bank, that will be elected by the new president. So that's also something that will be defining. Donald Trump would be expected to then potentially select somebody that he could push to keep the interest rate really low to grow the economy. So a lot of uncertainties here. And again, maybe to your first questions, Michelle, Also a point again that speaks for diversification and probably not putting all your eggs in the so-called US basket, but to diversify a bit more broadly, do not make yourself so dependent on all those potential outcomes.
Perfect. Thank you very much, Patrick. And as you said, we're already running out of time, but let's still go to the takeaways and then, of course, to the Q&A. So I hope you all have like 5 minutes more for us so we can cover our last topics too. And the takeaways, I give the word to you, Kevin.
Yes, it is very brief at this point. So I think we heard there's still quite of uncertainty also in the markets, and that's why emotions are it's good to remember that emotions are always not the best advisor here, rather to focus on long term and that time is on your side when investing. I think particularly the examples also show that regular investing really helps in these times of market uncertainty and to split investments there over time, and particularly diversification as a reminder. I think that we heard a couple of times today. Maybe a special takeaway from this webinar is also for all the ones that haven't yet tried out Selma AI to try it out, also to gain this maybe a step back and take a bit of a different look at their own finances. It can be quite an interesting point to figure out and kind of to spare here with artificial intelligence. That's it for the takeaways, and we can jump into the Q&As maybe.
Yes, perfect. Thank you, Kevin. And yeah, let's start directly with the first question. So the question is, what are the advantages of Selma compared to banks or doing it yourself? Maybe Kevin, you want to answer this?
Yeah, maybe I can go. Yes, I think as a tech company, we are very focused on automating processes and making things efficient. That's, I think, one of the core of our business model is how we can make investing easier, more accessible, and also cheaper, and provide services that are usually only available for large portfolios, already also for smaller customers. But particularly how we differentiate here against larger banks as well. And maybe on the do-it-yourself side, Patrick, how do you see that?
Yeah, I think with Selma, you in a certain extent also have something that is you can automate your own processes, right? And you can get this investment discipline that was so important in the last couple of months. I know it from myself. When I did my investments myself, I'm capable to do that basically, but then every month I needed to like run the process. I need to do the investments. I need to think, is now a good time? And to be honest, you never know. So it just makes sense to stick to this investment discipline. And then I think on top of that, there is also assistance available. Webinars we run on a hot Thursday evening, but also the support of our AI, of our customer support team that really also helps you to take your questions when it comes to topics around investments and financial planning.
Perfect. Thank you both. Let's go to the next question. So is there a plan to open up Selma AI so I can chat with her? Selma AI, again, a question for you, Kevin.
Yes, sure. Yes, as said, we are yet in beta mode, so a bit limited there, but our aspiration is to definitely open this up so that this become a full assistant where you can chat about various topics. Now we will gradually expand that, so we will keep the topics still a bit condensed. But if you want to be one of the first to try out new features, I will recommend also our contributor group here. They have been helping in developing Selma further. They are usually the first ones that get their hands on new features here as well. So this is the right place to be.
Perfect. Thank you, Kevin, also for mentioning this. I think for the contributors group, Nick can also share the link with you in the chat, because this is really the place where we announce everything earlier than normally, and where you get like insights firsthand and before everyone else. So yeah, it would be great to have you in the contributors group. So thanks, Nick, when you could share the link in the chat. And then I would say, let's go to like the last question, maybe 49 minutes. So yeah, last question for you, Patrick.
Yes, we are actively working on a portfolio customization, so options to adjust how your Selma investments are doing, and Bitcoin/cryptocurrencies is one of the topics we're working on. It does not make sense when you think about the global market portfolio. The cryptocurrencies are not as big that they would belong there, so that would basically then be something that is a choice for our customers if they want to put a certain allocation of their money into crypto/bitcoins, so everybody can make that choice themselves. What we will make sure is that you don't take risks in general that you shouldn't do in your personal financial situation. But that's actually something that we're actively working on in this broader context of giving more investment choices.
Perfect, cool, thank you. I think this question regarding like the MSCI World, I already picked during the webinar, so I think that's not needed to answer again. And yeah, then we've done it, you've done it, you can go out, enjoy the sun and the warm weather. And yeah, I want to say like thank you to everyone who joined this webinar, who listened to us, and yeah, who was so active in the chat. That was really nice to see that you all had a lot of questions. And of course also like thank you, Kevin and Patrick. Was as usual nice to have you with me in the webinar.
Thank you very much.
It was nice